Hi, today we are going to look at conversion cost. In the last video, we discussed about purchase cost according to IAS 2 inventory. Today we are going to look at conversion cost according to IAS 2 also inventory. You can find it in the Pathfinder for ICAN. We have it right here. So the example is conversion cost. So let's head to QuickBooks and see how we can relate these transactions in QuickBooks. So first of all, Kaduna Consumer Electrics is the name of the manufacturer who controls unit for air conditioning system. The following information is relevant. In order to create these control units, each control unit requires the following: one component X, one component Y, sundry raw materials, you can see with an S. So most likely these sundry raw materials are non-inventory. You don't need to track them. But component X and component Y, we need to track them. So we're going to create component X as an inventory, component Y as an inventory item, then sundry raw materials as a non-inventory item. Reason being that sundry raw materials, they are more than one. So that's the reason why they summarize them as sundry raw materials. So they don't need to be tracked. So let's go straight to QuickBooks and create that. So if you want to create that, you can go to vendors, inventory activities, to inventory center. From inventory center, you can click on new inventory and click on new inventory item. So here we are selecting inventory parts. So I'm going to name this component X. Okay, copy, paste and paste. Okay, so but then the cost for this component X according to our Pathfinder is 1205. So I'm going to have 1205, and is a raw material, right? So we're not going to use, we're not selling, so it's not going to be cost of goods sold. It's a raw material, so it's not going to be cost of goods sold. It's going to be raw material cost of goods sold. So that is why I named it as raw material. So we're using this raw material to track the cost of the purchase whenever we purchase component X. For the income account, we are not selling, but you have to select an income account. But over here where you see asset account, which is very important, we want to make sure that is on other current assets, and you can name it as raw material inventory. With this little information, you can go straight ahead to create the next item, which is component Y. So I'm going to go to next to take me to the next empty space. Then I'll just Control V and okay, have that as, let me copy that. Then I want to have it in our purchase description and our sales transaction description. Also, we want to make sure that we input the cost, which is 800 according to the Pathfinder. So 800 naira. I'm going to have this at 800 naira. And the cost of goods sold, we have to track it using a raw material cost of goods sold. So, which is fine. And also the asset has to be raw material. Everything is intact. We also go to next. But for the next, remember we have sundry raw materials. We are going to just name it sundry raw materials, but not as inventory item, because most likely we are not going to track that item. So if you're not tracking the item, you can click on non-inventory parts. Then you can bring it as sundry raw materials. Very important is this option. You see now we only have one, which is for sales and the sales price, but we are not selling these sundry raw materials. We are using these sundry raw materials as in an assembly or for a specific job. So I'm going to click on this so that it will bring out the purchase information. Over here I'll enter 150 naira, as this is the cost according to the Pathfinder. Then also we want to make sure that we are using raw material cost of goods sold. Now you see that we don't have inventory account. Why? Because we selected non-inventory part, so we're expecting that we will not track this material. There are sundry materials and we wouldn't track them. So let me just quickly copy this and have it pasted here, here, and here. So I can go ahead to click on OK for now. Then we'll go back to our question to make sure that we have our information ready. Now we have the three items. The company faces the following monthly expenses. As you can see, these are expenses, but then we are dealing with conversion cost. So we have factory rent, we have energy cost, we have selling and administrative cost. So let's go ahead and create for these three item expense item. So we'll go straight ahead to QuickBooks. Then this time around, we are dealing with chart of account. So we're going to click on list. The first option here is chart of account. So once you click on chart of account, you right click anywhere, then click on new. So the first item we're going to create is an expense item. The three items actually are expense items. So click on continue, then you enter the information, which is factory, okay, factory rent. This is it as an expense. I'm going to do save and new. Okay, save and new. The next chart of accounts we're going to create is energy cost. So energy cost. We're going to do save and new because we still have an item to create, which is an expense. Then this time around we're going to create for selling and administrative. So I'll just use admin costs. Then I have this as save and close. Now we have this information for the raw materials. I also have the information for the expenses. Now each unit takes 2 hours to assemble. Production workers are paid 300 per hour. Production workers are paid 300 per hour. They did not tell us how many production workers, so most likely we are using one production worker. So we're going to compute for one labor, one production worker. So how do you go about that? So let's go to QuickBooks and let's say we'll go to employees center, then we create an employee. So I'm going to go to new employee and just the first name and last name is enough. So I can have this as Salifu, then Yahaya, this way. I'm done with that. With this information alone, I can quickly go ahead, leave as is and continue. So we have one employee who we are going to make that payment to. Okay, so let's go back to our Pathfinder. And this employee is going to be 300 naira per hour, and we are using 2 hours. 2 hours. So we can also go to, let's purchase this item. Let's start by purchasing item. Then production overhead are absorbed into unit of production using an hourly rate. The normal level of production per month is 1000 hours. This is where you talk about overhead. Production overhead can either be fixed production overhead or variable production overhead. Production overhead can still be called factory overhead. From this information we have here, factory rent is a production overhead. Energy cost is also a production overhead because we are using factory rent. We are paying rent for factory and it's fixed. This particular one is mostly fixed. The energy cost is not fixed because the energy cost will vary based on the output. So you are producing higher, of course you expect that you spend a lot of money for energy cost. And if you are producing less, so it's dependent, is variable, it's not fixed. But the factory rent is fixed because it is not dependent on the output of the business. So if you like, you produce low, less, or higher, you are still going to maintain that amount you are paying as rent. Then selling and administrative cost is not a production overhead that is to be included to your inventory. This is an expense, is to be expense in your profit and loss. Okay, or profit or loss. So let's go ahead. Of course, the solution is provided here, but here we are looking at how we can bring this into QuickBooks. The what that is on, let's quickly bring up Excel. Okay, so let's go ahead to QuickBooks and make purchase for these three items. So I'm going to go to QuickBooks. I'm going to go to vendor. Most likely just go home. Then over here, you enter bill. If you enter bill in QuickBooks, you are buying on credits. So I'm buying from ABC Limited. Let's say this is our vendor. And today's date is 28th of December 2024. The bill due date is usually in 10 days. If you have a specified bill term for between you and your vendor, you can select. If it's not listed here, you can click on add new to create the term. We have expense tab and items tab. So I'm going to go to items tab and select component X, just one. And if you want to do more than one, you can enter the quantity. So I'm just going with what we have on our Pathfinder, and you can see that the cost is already reflected. The next one is component Y. You can see we also have one. Then the next one is sundry raw materials. So we can assume this is not one, but if you want to, you can include one. Sundry raw materials, or just leave it as that. Okay. So at the end of the day, we have this information, total 2,155. If you go to the Pathfinder here, you see we have 2,155. Okay. So I'm going to go ahead and save and close for now. Now we've bought this material. The additional information here is that we incur these expenses. So let's go ahead and incur these expenses. The company faces the following monthly expenses. Similarly, I'm still going to make use of bill. So I'll still enter bill. Once you've entered bill, you can just go to your expense tab. Initially, we use item tab to get our materials, but now we're using expense tab to incur our expenses. So we're going to select ABC Limited, select the same date, and go straight ahead. I'll type in factory. I have factory. Then factory is 16,500. Then the next one is energy cost, and this cost is 7,500. The last one from the Pathfinder is selling and admin cost, which is 10,000. So I'm gonna go ahead and hit save and close. Okay, now everything is intact, and let's go to our reports first of all. Before we continue, let's see what we've done so far. So let's go to profit and loss standard and see what's happening. Over here, you see the raw material for 150. Then our energy cost is 7,500. Factory rent is 60,500. And selling and administration admin cost is 10,000. Now, the cost of goods sold, this is our sundry material. The reason why it's reflecting here is because it is a non-inventory item. It's a non-inventory item. So that's why it's reflecting here on our profit and loss. And if you don't want it to reflect here, you can kindly just go back to the inventory center. Let me open Windows. So if you go to inventory center here, of course you wouldn't see it here on inventory center. So let's go to list and item list. So I have it here as sundry. So I'm going to create a new item. So let me duplicate. Okay, it's created already. I'm going to select this and select inventory parts instead. So I'm going to use it as inventory part, and I'm going to make sure that we track it through raw material, current assets, and the cost of goods sold also would be raw material. So let's use them as inventory parts so that we don't have a disturbing information on our P or L. So as you click on OK, we'll go to profit and loss, refresh. Now once you refresh, you see that we are left with our energy cost, factory rent, selling, and admin cost. But then let's go to report. Let's also go to balance sheet so that we can see the inventory that we purchased. Over here, you see it's 2,155. That is our raw material inventory, which is what we still have here as 2,155. Now, account payable is showing 36,155 because we also purchase for factory. We also make payment for factory rent, energy cost, selling, and administrative, which give us 34,000 naira. So this has automatically balanced itself. Now, if we go back to the question, just try as much as possible to be elaborate. So we're going to go make payment for this 300 for the labor. So the first thing you need to do, you need to ensure that you've incurred that expenses. So let me just still go ahead to vendor and enter bill. Let's do all the transaction. Of course, we might not really enter bill here because we're supposed to pay this staff. So we're assuming we are paying the staff, except we did not pay, we enter the bill. So let me just use bill. And if you don't want to use bill, you go to banking and you write check. Once you write check, it means you are making payment. But for now, we don't have any money in our bank account. So let's assume we still need to make this payment to Yahya Salifu as an employee. So that is Yahya Salifu. Then you go to payroll. Let's see if we have payroll. Yeah, we have payroll. But I would like to term this as direct labor. Direct labor. So as you click on this, hit on tab, then set up, because I don't have it. So it has to be expense, continue, save and close. So direct labor, of course. Then the amount is 300. We've paid 300, being 2 hours. So we're gonna write being payment for 2 hours. So if it is for 2 hours, then of course it should be 600. Looking at the question over here, that is 2 hours. Per hour is 300. Okay. So let's go ahead and make this payment 600. Of course, it will go to show minus 600. Save and close. Now we've made payment for the labor. So let's refresh our report and see. So this is the payment that's going out of the bank. Bank is reducing by 600, and our profit and loss is also increasing by 600 because profit or loss income statement, because we make payment for direct labor. This 34,600. Now going to the question, we have overhead. And how do we know we have overhead? Production overhead are absorbed into unit of production using an hourly rate. The normal level of production per month is 1000 hours. So if we come to Excel here, let's bring out the calculation. So we have for factory rent. So factory rent is an overhead. So factory rent is 16,500. Then we have energy costs. So I'm not going to bring selling and administrative here because it is not an overhead, which is 7,500. If I total this, alternate equal to enter, I have 24,000. Okay. Now the absorption is based on normal production hour. Normal production capacity is 1000 hours, but then we're only able to make use of 2 hours. So we'll go back to Excel. So we have 1000 hours. This is normal production hours. This overhead normally, according to IAS 2, is to be absorbed based on the normal production capacity. And we're given in this question that we have a normal production hour of 1000. So once we add up our factory overhead, which is factory rent, which is a fixed one, and energy cost, which is a variable, we would now do the absorption, which is equal to 24,000 divided by 1000, which is 24. But then we were able to only use 2 hours, so that would be equal to 2 times 24, which is 48. Now if you come to our Pathfinder, you see that we have 48. So we are left with 2 items to create here: labor and production overhead. So go to QuickBooks. Now go to item lists, not inventory, item list, right click, new. So now is a labor, so I'm going to have to click on service. So I'm going to call it direct labor. I have to click on this because I'm purchasing this labor. I'm paying someone to carry out this labor, but the expense account is going to go to the direct labor, which is here. So then go to direct labor. Then income account, you can still select any account, doesn't mind, because we are not selling this labor. So let me just copy that. Okay. Then next, the next item here we can use, which is a production overhead. Production overhead can go for other charge. You also click on this. So I'm going to click on production overhead. Remember, it's not just one item. We've already done the computation. So it's both your factory rent and the energy cost. So over here, we need to create an account that will take care of production overhead. So I'm going to go to add new. So I'm going to name this production overhead. Okay, production overhead. Now, because this is going to be absorbed into our cost of, it's going to be absorbed into our raw materials. So we have to make sure the right account we're going to make use of is most likely going to be cost of goods sold, because it's going to be part of our cost of goods sold. Then I'm going to save and close. Then I click OK. Now we can go to right click, then new. Now we're going to build the assembly. So we're going to click on inventory assembly. Then let's name this control units. Control units. Now we'll be needing these items for the control units. Component X, we'll need one of component X. We'll also need one of component Y. We'll also need sundry raw materials. We'll also need, we can just do a full view. Then we'll also need overhead, which is production overhead. Okay, this would not provide the information. We're going to go back, just click on OK. I'm going to go back to edit this. Let's go to production overhead. Okay, we just put a price here. Then the income account can be sales. Then sales price, let's just use 3,000. So I'll go to production overhead. Then I'll set an amount here, which is 48. Click OK. Then I'll edit our control unit again. Then go to full view. Production overhead is 48. Then we have labor, direct labor all again. So we need to make sure that we have a cost on the direct labor. So direct labor is based on hour. So we have time by hour. Then per hour is 300. Okay, so I'm going to click on OK. So hopefully we've entered all the information now. So we'll go back to control units. Then go to full view. Then we'll select direct labor. Okay. Direct labor per hour is 300, but using 2 hours so that we can have 600. You see, we have total bill of material 2,803. Let's see if we are on point. 2,803. Okay. Now click on OK. This is the cost for producing one control unit. Okay, I'm going to click on OK, but we've not built it. So for now, our control unit is 0, component Y is 1, component. X is still 1, and our sundry material is also 1. Production overhead and the likes. Now, in order for us to have this information, now if you go to report, I'm going to check balance sheet and income statement and financial position. You see direct labor, everything is still remaining the same. If you go to balance sheet, which is the financial position, we still have what we have before. So let's now go and build the assembly. So go to inventory, activity, build, assembly. So once we select this item, it's going to tell us what we can build. As you can see, because we have them 111 for the materials, the maximum number you can build from the quantity on hand is 1. And this is based on the fact that we only purchase them 1. I'm going to build and close. So once we build and close, let's head back to balance sheet for refresh, and you see what we have as our raw material is 2,803. The bank is less of 600 because we don't have any money in the bank, and we paid maybe like overdraft. The account payable in total because of the bill we entered 36,155, and this is the net income. And this is your one thing again you can check is your cash flow. So just generate the report, statement of cash flow. You see your statement of cash flow. This is your cash flow. So this is how we're able to do conversion cost based on IAS to inventory using the Pathfinder, ICAN Pathfinder. If you enjoyed this video and you learned something new, please try as much as possible to like the video, share the video, give me a thumbs up, and don't forget to subscribe and turn on your notification so that you get notified whenever I make new video. See you in the next video.